Hey everyone, this is Alex Bullisbach, your managing advisor here at Cottage Hill Capital. And just like we did for the month of April, we're going to look back at the month of May, a recap, if you will, of what happened economically. The month of May was actually quite remarkable. The S&P 500 staged a 6.2% comeback, erasing most of its year-to-date losses. This turnaround happened even amid a lot of complex landscape for trade agreements, mixed economic signals, and even a downgrade in U.S. debt. Bonds declined slightly at 0.7% in May, although they remain positive on the year as a whole. The 10-year Treasury yield ended the month at 4.4%, reflecting ongoing volatility around federal spending and debt concerns, which is something we're looking at very closely as bills pass between the House and the Senate and back and forth. On an economic front, encouraging news emerged from the inflation data that was presented by the Consumer Price Index. It just rose by 2.3% in April. Compared to the previous year, it's the slowest 12-month increase since February of 2021. May's rebound serves as a remarkable and powerful reminder to investors and ourselves here at Cottage Hill Capital how quickly markets can shift and sentiment can shift with conditions as things stabilize. Over the next few minutes, we'll discuss some of these major narratives and concerns with you all. For our first slide, we're going to be looking at the federal debt to GDP. And first, in a significant but not unexpected move, the Moody's credit rating has downgraded the United States from its previous top tier status. This development marks another milestone in the ongoing concern about America's fiscal health. The timing of the downgrade coincided with the House's passage of a tax and spending bill that would extend provisions from the 2017 Tax Cuts and Jobs Act. And the Penn-Wharton budget model projects this legislation could increase deficits by almost $2.8 trillion over the next 10 years. The bill now goes to the Senate, which it's there right now, might be modified, kicked back to the House, eventually landing on the president's desk. We don't know. But the chart in front of us illustrates the national debt has only continued to grow, with U.S. total debt reaching 122% of GDP, while net debt, which excludes what the government owes itself, has climbed to 97% of GDP, or gross domestic product. While these fiscal challenges clearly require a long-term solution, the US dollar's position as the world's primary reserve currency continues to support demand for treasury securities in the foreseeable future. Now, for our next slide, we're going to be looking at the US trade balance by country. So we're looking at a rolling 12-month visible trend of who we are trading with. Now, the trade was another major topic in May as negotiations with countries showed meaningful progress. This means that many of the worst case scenarios that we all thought might happen might be off the table at this point. The administration reached agreements with both the United Kingdom, China to a certain degree, while continuing discussions with other major trading partners outlined here. Despite these positive developments, uncertainty remains a key theme in the trade landscape. Both China and the US have recently accused each other of violating their trade agreements. Additionally, the administration is pursuing higher tariffs on steel and aluminum imports. This administration's trade policies also face legal challenges. In May, the U.S. Court of International Trade struck down many newly enacted tariffs, ruling that they exceeded presidential authority. While a federal appeals court has paused this ruling, ongoing legal challenges add another layer of complexity and uncertainty. Now, for our last slide of the May recap, we're going to be looking at the stock market and the earnings. The S&P index price and the trailing earnings price per share since 1990 to present day 2025. Finally, the first quarter earnings season provided encouraging news for the markets overall, with corporate America demonstrating solid financial performance amid ongoing economic uncertainties. The S&P 500 companies delivered positive earnings and revenue surprise despite the challenges of the past several months. Meanwhile, consumers have been pessimistic this year, driven largely by concerns over tariffs and inflation. However, recent indicators suggest this trend might be shifting. The University of Michigan's latest survey for May revealed that the inflation expectations decreased slightly, while overall sentiment appeared to stabilize to a normal degree. Overall, May was a positive month despite fiscal concerns, and really there's progress with trade negotiations. All those things help provide a boost to markets. These developments highlight the ongoing importance of maintaining perspective during these times of uncertainty and focusing on the fundamental economic trends rather than getting caught up in the short-term policy headlines. Now, I hope you guys had a great time looking at these charts. It's a real comfort for us to share them with you and have them equate to your overall financial plan. And the plan really is to keep diversified and your goals in mind. And with your goals in mind, I'm always here to have a friendly conversation, create a little bit of education, and I'm always here to talk if anybody wants to understand more about their own financial plan and how to achieve their goals. Again, this is Alex Boulsbach, your managing advisor and founder of Cottage Hill Capital, and I'll see you guys next month.